What's up? Good morning, everyone. Happy Thursday. It's June 27th, and prices of BTC are currently at $11,800. Um, all right, folks. Well, it looks like we hit that top right around, 13.8, 13.9, as we had said, the area that we were looking out for. Okay? If you don't believe me, go to the Cryptosomniac community, go to the announcements. You can see everything right here. Okay, I said that I was going to be selling off everything in my BTC stash in short term at 13.9K or a manual stop at 13.5. So I sold pretty much everything. I market sold right around 13.8. So I basically sold the top, guys, and I did not look back. Okay. Now let me explain why I sold where I sold and why I chose not to look back. All right. Now, multiple areas of confluence had told me that anywhere between 13,000 all the way to 13.8, 13.9, there was a lot of things to look out for. All right. So let me dial back. First things first. Okay. I had this flag drawn. Okay, you can even look back on my previous videos. I had this drawn since we were in the middle of it way back here, beginning of June, end of May, right? This was the flag that BTC was, traversing in. Okay, once this broke out, after it traveled like this over here, my target became the size of the flagpole right here. What is the size of the flagpole? It's from about 5,100 all the way to about 8,300. Okay, so about $3,000. So what I did was I took this flagpole measurement, put it where we broke out right there, and that gave me about a 13.3, 13.4 target right there. You can see my little flag right there, 3,000 bull flag size right there. So that's one reason why I thought that this would be a good target to have. Also, you've clearly broken out of this big resistance area, so I wouldn't think that you would just skyrocket up. So I figured at least taking a lot of profit right here would be the wisest thing to do. Okay, now how did I know exactly why to take profit on everything at this particular point? All right, let me sort of explain you that as well. Okay, here's another chart where I had drawn up. This is the pitchfork fibs on the weekly time scale. The bottom of the fib, let me turn this volume off. The bottom comes right there. Okay, the bottom of the 2015 bear market. And then the top of this range for the pitchfork comes right at that top 20K. The bottom comes right around that 3.1K. Okay, so now each of these rungs represents a pitchfork fib level. Okay, I've labeled it out right here. You can read this on your own. Okay, once we broke past the fib of the pink right there, which was this green candle right there. All right, what that told me was, oh, I think I moved the fib. Shoot, there we go. Okay, once I moved the fib, all right, what that told me was that, or I'm sorry, once we broke through this fib right there, what that told me was the next fib is going to be the next resistance level. Okay, so we went from the pink, which is the 0.75, to the purple, which is the 0.618. Okay, you could see that we hit that purple fib perfectly, and we even broke through it. But did we close above it? Not yet, right? So then why did I decide to set the markers right there? Okay, right around 13.8, 13.9. All right, now let me show you. Okay, this is where things get really interesting. This is where you have to sort of put on your thinking hats and try to figure out this market from a deeper perspective. Okay, here's a fib from the top of this market to the bottom. All right, once we sort of capitulated on the way down over here, we then rise back up in that range of fibs from this top to this bottom, and we kept moving and moving, and we started breaking through the 382 right there, broke through that 50 fib right there, And then this, the golden pocket fib, it's known as, all right? That's where I knew that things are going to get really interesting, okay? Why? Because the 618 fib, historically, in most assets, even in BTC, has been very resistive, okay? I can even show you firsthand, all right? Watch this, okay? So once we go back from the bottom right there, you can see that prices bounce up to that 382 fib, right? Couldn't even reach to that 618, okay? That means that there's almost aggressive bearish strength to push the prices down. Typically, okay, I'm gonna delete both of these, all right? So now we go from this top to this bottom, okay? Look at where the price reaches out to, right there, 618 fib right there, okay? Then I'm gonna pick another one. I'm gonna pick this top to this bottom. Again, look where the price reaches to, right there, 618 fib, right there, $8,400, okay? Let's see if there's another one right there that gives us a 618, okay? This wick kind of goes all the way through, and it's kind of hard to see, but let's see where it reaches out to. I mean, most of these candles close right around 50 or the 382 fib, okay? So the point is, guys, Fibonacci tools are very useful, okay? They're very useful in almost any time frame in any market. Why? Because fibs are actually found in nature, naturally, and they're based on psychological levels that most people could find attractive in terms of price gained or retraced, or it could be seen as a pain threshold, okay? When prices start retracing, meaning that they start pulling back 50% of the way, people are really freaking out. 61.8% of the way, that's when usually people call it quits, okay? Because it's like 62% of their money is essentially gone. Think of it that way, okay? That's where a lot of people, call it quits, right? So that's why it's seen as a level where a lot of people are waiting to look out for, because they want to buy the blood, they want to buy the pain. Same thing on the upside, okay? When prices keep on moving up, excuse me, the 618 fib is seen as an area that marks a lot of resistance, okay? Why? Because it's just how bots and algos are programmed. It's just how smart money thinks. And if that's how a lot of other people are thinking, then maybe you should too. You need to understand that, people often talk about that technicals or TA is a self-fulfilling prophecy. Well, I think that's, what's so great about it, right? Because everyone is actually looking at the same levels, okay? Because they understand the same technicals. Whether it's the 100 moving average or the 200 moving average, there's no magic in these technicals, right? It's not like the 618 fib just randomly has like a hammer attached to it and pushes the prices down. No, not really. It's smart money who understands that, hey, this is a psychological level. Bots and algos are programmed by smart money, so they look out for the same level, okay? And then I would say if you are a retailer who wants to grow, in his trading skill set, I would too, right? So this is why the idea of self-fulfilling prophecy is not really an insult, but rather you need to understand why it's a self-fulfilling prophecy. And this sort of explains that if everyone is looking at the same level, there's a reason why that level just may hold or just may break, if it's on the other side of the trade, okay? So, people try to demean TA because they don't understand it, but in reality, it works. And I don't know how you can hate on something that works and makes you money, right? So anyway, point is that I knew that this 618 fib right here was going to be playing out. And at some point, we were going to get rejected, all right? Whether it was, us pushing through this area and even going as high as 15K, I had a strong feeling that we would probably close under this area. And this is why, again, if you look at my community, I sold right here. You can even look at the timestamps. You can look at the gains reviews right here. Everyone has been, showing more and more green through the day, okay? People have been, sitting out with me or been taking profit. And we then essentially, as you can see right here, just closed out my BTC at 13,900, bought at 11,490, 21% profit in a day, paid off my Advantage membership for the next 6 months. All right, guys, we do what works, we do it great, and we do it very successfully and consistently. All right. Another reason why I want to show you, okay, a chart is I mapped out the previous resistance levels, okay? Again, here's my chart. You can go watch my videos for the last few days and see if these markers are correct. First marker I drew was I stated that way back here, if 9,600 gets broken, which was this close right here, I stated that 11.7 will come easy. If 11.7 gets broken, I stated that 13,000 will come easy, okay? And then beyond that, my final target was this red target right here, right around 13.9 or so. Again, this is a Bitstamp chart, so you can see price came very, very close to it, okay? When I set a marker like this, folks, it doesn't mean the exact price level. That's impossible. I can never predict to the dollar, the penny, or anything. I give a range, okay? I say, you know, this $300 to $400 range, you know, that will be the area that I will be selling off in. And you can see right here that I have been taking profits all through the day, okay? Over here, I stated that moving up my stop for the other 5% to 13,400. Getting stopped here would be a nice 14.2% gain. And then before that, trimmed 5% of, you know, 12% profit around 12,800. Being a successful trader, folks, does not mean you have to sell the top. Of course, I could have, you know, sold everything at 13,900, right? But I wasn't that confident. I don't think I'm ever 100% confident, honestly. You know, I'm just being completely honest with you. I will move stops. I will sell off positions. You know, when I start seeing shakiness in the market, okay, and I decided to sell right around 12.8 because I figured that that was close enough to that 13,000 marker. All right, that's fine. Then I held on to the rest of my position, and I moved my stop up. Okay, and then once I moved my stop up, the prices kept moving and moving, and then I saw, okay, well, 13.8, 13.9 area is really my last marker. I don't have any reason to be in a trade beyond that. Okay. Even if you're making money, right? If you're in profit, you need to have a reason why you're in a trade. Because foolishly just doing that, yeah, you might get lucky once or twice, but ultimately you will pay the price. Like most people did yesterday, who probably bought up here, right? Because they thought that BTC is going to 15 or 20K or whatever nonsense that they were talking about. And they bought into what people were selling and boom, got dumped on. In I think 15 or 20 minutes, prices went from this high to the 13.8 high all the way to about 11,700, right? So understanding and having a game plan set up right from the get-go will help you a lot, you know, more times than it will hurt you, okay? All right. Another reason, so I've shown you the technicals, okay? Another reason why I sold where I did was there was some foolishness in the atmosphere in the crypto space. I went to different, you know, Discord communities and I saw what people are saying. I went to Twitter. I went to the sentiment bots that are available, and you can check these out too. Basically what they do is they pick up the sentiment of greed or fear or anxiety in the keywords that people are typing in the crypto space, whether it's Twitter or Google search terms. And it gives you an idea of, you know, if people have a heightened sense of greed, meaning that they keep thinking prices are going to go higher and higher. You know, people kept saying, you know, some dumb stuff about, hey, I expect BTC to go to 17K this weekend, or, you know, I think 20,000 is going to come easy this weekend. That's when I knew. I was like, okay, this is the time to get out. People are way too bullish. It's time to just, you know, take your profits while you can and just step out of the market. Let the market do its thing. If it pushes higher, hey, there was a chance I could have gotten back in, right? I don't care if I have to pay a higher price. it's really the value of the technicals that matter. And I've said this over and over again, but I kind of want you guys to understand why that's important when I say that, because if you don't understand that, that the prices are really just a small part of the game, okay? Understanding the technicals will almost always guarantee you win, especially when you manage your risk properly, when you position size properly. Yesterday I kept getting asked this question about, why am I only 15% into BTC, right? Like this was my entire position yesterday, okay? Only in BTC, and people ask like, why am I not in LTC or Ethereum or whatever? Well, I have some medium-term positions in LTC and Ethereum, and I'm doing pretty well in them, okay? But beyond that, people think that once the market is ticking up, you need to be all in with your money, right? That's not true at all, okay? You need to first understand how to position size properly so you can make money consistently and not lose your shirt while doing so, okay? So I had 15% in the market because that's what I was comfortable with, and so that 15% made me on average a 15% PNL. All right, I think that's good. I think I got into this trade maybe 2 or 3 days ago, maybe actually 4 days ago, and 15% profit for 4 days on some decent sized capital. I think it's a pretty good victory, right? But I think the point is that people are far too greedy, and they don't understand when to sort of cut down their positions, when to take profits, and that's sort of why we're here as a Cryptosomniac community, folks. We do this best, I think, than any other trading group or paid group. No offense to them. I think we just work harder. Every single morning, I deliver this analysis every day, and then I put in multiple updates through the day, right? As you can see, every single few hours, I had put up updates for my community. This is all yesterday. As you can see, okay? So if you don't have this kind of engagement with your paid group or whoever you're following, then are you actually successful making money? Are you learning? Are you able to engage with community admins or people who understand TA? If not, then maybe you need to consider getting into a group that actually does something valuable like we do. All right, okay. So now a couple of reasons why I got out. You saw my fibs, you saw the 3,000 bull target, right? You saw how I psychologically sort of understood that people were getting way too greedy, way too FOMO-ish for the weekend, thinking it's going to 15 or 20K. And then I saw the Twitter bots, the sentiment bots. So a lot of reasons that told me that, and obviously the technicals too. All right. So now let's look at where we see prices falling to the downside. Okay. So now that we've sort of broken past 11.7, okay, I would figure that we're going to come back to that area, maybe 11.7, 11.5, and test it as support. Okay, that's the first level that will get tested as support. Let's see over here. Let me scroll out on this. Okay, so here's that area, right? So this is still the weekly candle. This weekly could still close right in this white box, which would be the closing of this these couple of candles, the weekly candles right here, back in March and February in 2018. If it closes under that, this becomes then essentially a shooting star or a gravestone doji. Both signify a potential reversal in price momentum. Doesn't mean that the prices are going to tank down here. All right, that's another thing that folks need to understand, is not everything is going to signify the next bear downtrend. It just means that temporarily price is showing weakness, and it may reverse just a little bit, and then it might bounce back up again. Okay, to become a valid and confirmed gravestone doji or a shooting star, all right, let me first show you guys what that is. Gravestone doji. Here's a Google image. Okay. See, that's a gravestone doji right there. See, there's a long wick to the upside, very little body, right? Here's another gravestone doji. See, long wick to the upside, very little body. Okay, or I can show you a shooting star. See, oh, not that kind of shooting star, but here's a shooting star. Same thing, right? Almost same thing. It just has a bigger body. That's really it. Okay. Even over here, here's a shooting star right there. Okay. These come, both the gravestone dojis and the shooting stars come at the top of an uptrend, signifying a potential reversal. Again, I say potential reversal. Doesn't mean that it has to be a reversal. The next candle could be very bullish, just like it was over here, right? We had a doji right here, right? Potentially an evening star, and then a follow-up candle that was bearish, engulfing essentially, and a strong bearish candle. So that validated and confirmed this reversal doji. But then look, the follow-up couple of weeks, we had massive bullish candles. This could also happen right here, okay? This doesn't mean that you're going to start your next downtrend, all right? It just means that potentially this might be the top. We will see if the next candle confirms that this is the reversal point, okay? So then after that, once we see a bearish candle like this, then what do? Okay, then you start mapping out your levels. Okay, where are the next support levels? All right, let me see if I have this chart right here. Okay, so here are sort of the next support levels. I'm gonna map them out right here. Okay, one of the levels definitely is over here. Okay, this block right here. All right, anywhere between about 9,400 to about 9,000. Okay, this would be considered your order block where prices stalled a little bit for the day, meaning that, you know, there was a lot of sellers right here, but the buyers bought up everything and then they pushed prices to, you know, the newer highs for the year. Then that means that this becomes your order block. Okay, so this is one of the areas to look out for. All right, another level to look out for is probably this region right here. Okay, probably this resistance block. I would say that's around 8,800, so I'm actually going to just map it out with a marker, like right around there. Okay, depends sort of which exchange you're looking at, so right around 8,800. Okay, beyond that, the previous resistance was this black marker right there, right around 8,200. Okay, 82 to 8,300. All right, so you have a couple of different levels, you know, varying from a range to specific markers, right, on the way down. I would say there's probably, I don't know, there's probably something in the middle, I bet, maybe like some 10,000 levels. Like this right here, this was a range right here, right? You can see that prices first moved sideways right around this area, around 11.3 or so. So that makes sense that prices came back all the way down here, hit this as a wick, which was the previous trading range between 10.3 and about 11.3 or so. Okay, you can see that this is the same area that price is coming back to, hitting the top of the range and then bouncing off. This is also a possibility that 11.3, 11.4 could be the potential reversal area. Obviously, prices are way up here already. So if this becomes, you know, somewhat of a reversal candle, or rather the next candle, you know, becomes a potential bullish candle, then this might mark a temporary reversal in price. Okay, and that could push prices at least to this 13,900 high that we saw, or maybe even higher. Okay, it's very possible. All right, but you're first going to have to gauge and see if you're seeing a bottom being created. Okay, Bitfinex doesn't have volume. Let me put on this area right here. Okay. There's the volume right there. Okay, so first things first, you're gonna have to see the volume trickling down. Okay, you don't want to see more and more volume pour into the sell side momentum. All right, why? Because that means that, you know, selling has not stopped. Okay, especially if the candle bodies are bigger and bigger, So you can see these wicks right here are pretty long, right? That just means that all of this got bought up. All of this part of the wick got bought up. This part of the wick got bought up really easily. You know, the bulls, although the bears tried to force the price down over here, the bulls bought up everything in this range, and then they bought up everything in this range. Okay, so that shows, you know, bullish pressure. But is it going to last? Well, we'll have to see, because this to me is not a bottom. Okay, you know, 4 candles, you know, of this size, even if the wick is long, that I don't feel comfortable buying here. Okay, another area that you could potentially buy is the top of this bull flag right here, anywhere between 10.7 and 10.9. Okay, if the prices keep falling over the next day. All right, so you have a couple of different areas, right? You have the top of this trading range around 11.3. You have this area right here around, you know, 10.7 to 10.9. If the daily candles keep breaking down and hit the top of this bull flag, you know, previous resistance turned into support. Okay, and then you have, let's see, if I go back on the daily over here, you have this order block right here around 9.4 to 9.0, so $9,000 and $9,400. Then you have about $8,800, and then you have about $8,300 or so. Okay, mark out these levels on your own charts, folks, and start looking out for them. All right, I would say that personally, I don't feel comfortable buying into BTC just yet. This is still a very scary candle. We still have about another 12 hours to go in this. When I started looking at this on smaller time frames, I think things definitely looked a bit scary. Let's see where it was. Maybe it was like the 5-minute chart or something. Okay, here's that far. Let's see. This is a 5-minute chart right here. Okay, so what we're really seeing is maybe a big parallel channel. I don't know if this will work, but let's see. No, that doesn't really work, but this one might. Okay. Yeah, I would say this one works a little bit better, at least, because this right here, it dropped out, but then came back into the parallel channel. And then I bet there's, you know, you can probably draw this one too. Like that. No, that one's not gonna work. Okay, I would say this is a, you know, probably the best fit parallel channel, because you had one touch right there, another one right there, 1, 2, and then 3, 4 right there. Okay, so this is probably your best fit parallel channel right here, and you can see it's just resuming its downtrend. All right, even when we start going out on the 1 hour chart, okay, all I really see is a top being created, a lower high, another lower high, and potentially it might drop to another lower high. One other thing that I wanted to show you on this, okay, here's where this is where I became a little bit cautious too. Remember how I explained to you fibs are so important? Here's a top of 3,800, or I'm sorry, 13,800. Here's the bottom of the wick right there. Okay, look at what happened when we tried to break past this 618 fib. We struggled, broke past it, got to 786 fib, boom, you know, reversed all the way down. Okay, so we got to that 786 fib, but then, you know, almost instantly just came back. All right, so things are getting really interesting for BTC, and I personally think that it'd be best to let the bleeding just play out, whether it's, you know, a few days or a few weeks. I don't really know. All I know is that this run has been very massive, and I think prices need to cool off. Okay, another thing, actually, if I can point this out with the proper chart that I have, I think I had drawn this on the daily. Let me see where it is. Maybe it's in my Bitcoin analysis over here. Oh, here it is. Okay, so I had drawn this yesterday, all right, and stated that prices are getting, really close to this big resistance level in the RSI. All right, this is the 4-hour time frame. And every time prices have gotten over here, the RSI likes to pull back to this gold box right around, high 50s to low 60s, okay, in terms of the RSI. All right, and that's essentially what happened. Whether it's the daily or the 4-hour RSI, you can see even over here, okay, if we start pulling this back a little bit, all right, we got way into this overbought territory, all right? So a pullback was definitely necessary, folks, and that's exactly what happened, all right? So you could see I was also watching the RSI and multiple areas of confluence showing me that 13,000 was already going to be pretty significant. The 4-hour RSI, the 1-day RSI was already giving me signs of overbought levels. So this is how I was able to gauge why 13,800 or so was a top. Okay. All right. Last thing I want to look at is the CME futures. Let's see. Okay, now other areas that you could look out for in terms of drops on the way down, there was a gap right here between 11.8 and let's see where this high was, 11.5 or so. I would say that actually got filled by this wick right here that we just had yesterday, okay, or today, okay. Now the remaining gaps are still between 10.6 all the way down to about 10,000. And then this gap right here that's still been unfilled between 8.9 and about 8,500. Okay, so different areas for you to look out for as well. Okay, let me see if I can mark these out. I'm gonna do it right there, and then this one right about there, and then this one right about there. Okay, so now you have some gaps to look out for. All right. These gaps, as I've mentioned, typically have been filled. It's not a necessity that they do get filled. Okay, gaps occur because traders are. Well, first of all, gaps occur because it's really just about market open hours or weekends or whatever. That's really what the CME operates in, right? They're I think Monday through Friday, regular 9 to 5. Crypto or BTC exchanges are open 24/7, no holidays, no nothing, right? So these gaps occur when prices take off, okay, over the weekend or after hours, and then it leaves this gap for the CME chart. And potentially what happens is traders get trapped in these positions because if they bought here, the price has shot up over the weekend or after hours. Now their position might be underwater, meaning that if they were short right here and prices shot up, that means that all this movement right here, that forces their short positions underwater. So what did they have to do to fill this gap? Well, I've made a video on this. I guess this is my tinfoil hat theory, is that I think CME futures traders and say some Wall Street whales or some whales from Asia work together on Bitfinex or some other exchanges to be able to hold the price down to cover their positions, because if they don't cover these positions, that means that their larger positions, which in the CME BTC contracts, each contract is worth 5 BTC. So if they're underwater, that means for the most part they're either $50,000 or $100,000 underwater in each potential contract. Okay, so for that reason, these gaps more often than not have gotten filled. Okay, whether they're long or short, they want to fill these gaps so they could either close out their positions or load up on the other side of the position. Whether if this was going up, they want to load up on the long side. If this was going down, they want to load up on the short side. Okay. All right. I hope that makes sense. One of our members asked, what's the halving and projected pricing during it? Okay, so the halving is simply, the miner's ability to get rewarded per block I think that gets reduced from 25 BTC to 12 and a half. The last halving was, I think, May 2017. And clearly we saw price, skyrocket in May 2017, or well before May 2017, right? So in 2016 or so, say a year before, okay, so a year before 2016 May, in the 2017 halving, right here, prices were at about $492. In May 2017, at the halving itself, they were around $2,000, so about a 5x gain. And obviously after that, prices took off too, okay? So prices multiplied by almost 5x from a year before the halving to the halving, all right? Now, here we are in May or June 2019. The halving in May 2020 reduces the block size, or the block reward, from 25 BTC to 12 and a half. So that will be, from this here to about somewhere over here, right? So prices could increase if we're saying, the same thing, like a 5x gain. So we're at 12,000. That takes us to about 60,000 in about, May 2020. Okay. I think it's very possible. I don't know if it's going to be likely to get up to 60. But hey, I've seen crazier things happen in crypto, right? Especially the last 2 or 3 days that we've seen. We've seen prices skyrocket 15-20%. Okay, so it's very possible. I've explained, why I thought the 13.8, 13.9 was the top. I've also explained the retraces on the way down. I don't think I went through the fibs on the way down, so let me try to go through that. Let's see. Let me pull up this chart right here. I think this one is going to be very useful. Okay. So once we sort of took off here, right? So I gave you guys multiple levels to look out for, but I didn't do it based on fibs. Okay, so I'm gonna do it based on fibs. So we hit this 13.8 top right here, right? Let me get rid of this one first. I need to have it on the hours. This one too. Okay, anyway, I don't know what's going on. Here's the bottom that was put in right around $7,600, okay? And here's that 13,000 top, right? If we were to draw a fib on this, the potential areas that prices could bounce off of, the most, I would say, crucial areas that price typically bounces off of is the 382, the 50, and the 618. Okay, so now you have different markers to look out for: 11.4, 10.6, and 9.9. All right, these are also some potential areas that price could bounce off of. Okay, and if we sort of stretch this back, okay, this gold box right here, you could see comes out from this top right here that we had in 2018 March or February, and then this top right here around 9798 in May 2018. Okay, you could see that these fibs line up exactly in that gold box. Okay, so anywhere in this area, prices could definitely retrace in. Okay, so keep those levels in mind as well. But the point is, folks, what I'm really doing right now is just pausing. Okay, pausing and waiting to see what the market shows me. Even if I have to pay a higher price tomorrow or the day after, I'm okay with it, but I don't want to buy uncertainty right now. Okay, buying uncertainty and taking an unnecessary risk on your capital is the worst way to sort of become a consistent successful trader. All right, so with that being said, you have levels to look out for. You know where the CME gaps lie. You know why gaps work. You know the fib retraces to look out for. Let's see. One last thing that I wanted to show you, okay? As you could see, this Elliott wave count right here, shows that wave 1 right here, 2, 3, all the way up here, 4, and then 5. This was probably, if people say that this is the finishing wave right here, that means that we then have an ABC corrective wave structure. Okay, A, B, C could go pretty low actually. C could go almost to the 618 level of this entire move from this bottom to this top. And that 618 move right here, you can see, maps out to about $72 to $7,300. Okay, that is also very possible. All right, is it probable? I'm not sure yet. Okay, I don't think that we are at the finishing wave just yet. I personally think that what we might be in is this 3 wave right here. We might be starting a longer corrective wave structure of wave 4. Okay, and that might end somewhere in, I don't know, middle of July, beginning of August, somewhere over here, because it took about 40 days from wave 1 to wave 2 to correct, and typically wave 4 is about the same time. Doesn't mean it has to be exact, but even 20 days of correction or so for wave 4 is very possible. Okay, and then the 5th wave could take us higher towards, I don't know, 20,000 the previous high, or like 25 or 26. Okay, so this, in my opinion, is a bit more probable than the 3 right there, the 4 right there, which came literally 2 days later, and then this being the 5th. Okay, but again, that sort of remains to be seen. And within this, this 4th wave, we'll probably have an A like this, a B like this, and a C that stretches down over here. So we'll probably see a ABC corrective wave structure if this is the 4th wave that will be stretching out into July or so. Okay. All right. Let's see. I'm looking at, let me take a look at ETH. Let's see where my other chart is. Ethereum is still doing really well for me. It was at a high of almost 360 or so. Let's see, went to a high of 367. I mean, that was pretty great. Okay, so here is Ether. All right, I'm up on Ether. I bought in around 240, so right around this area right there. Still up about 30% on it. Okay, so pretty great. I was up to a high of about 51% or 52% yesterday, but I didn't want to close it because my targets for Ether are about $390 to $400. It's actually a medium term trade, so I'm really not concerned about what kind of time frame I'm looking at right now. Typically I keep my medium terms open for at the very least a few weeks, at the very most a few months. Okay, and in our community we do short-term channel right here where we announce all the short-term trades that we're taking. Medium term is, like I just explained, a few weeks to a few months, and then long term, which is everything that I'm holding for the long term. Okay, and Bitcoin analysis, as you guys saw, I put up daily videos every single day, and multiple updates through the day. And then trade setups are just random trade setups that I find really appealing. You can take them if you want or not. With everything, folks, you can take something in terms of a trade or not. But for the most part, it's really up to you. This is not financial advice. You can buy, sell, do whatever you want with your money. I just provide you the information that I find appealing, and I show you exactly what I'm doing. So if you want to follow what I'm doing, you might make some good money. Not guaranteed, because sometimes I do put up losing trades, but you can see right here, I've made some good money over the past few weeks, few months, even the last 2 years. So, and these reviews right here, folks, that stretch back all the way into the 2018 bear market will tell you exactly what we're all about. All right, and our $97 per month is way more than worth it. All right, okay, let's see what else. I think that covers ETH. Oh yeah, let's check out LTC. I know LTC took a beating. All right, so LTC has fallen out of this parallel channel right here. Okay, it's starting to get broken down past the parallel channel, and now starting to close at the high of this previous swing right here. Okay, So this one right here that was resistance for so many times, it's now testing it as support. That marker is right around 118 or so, okay? So I'm kind of down a little bit on my medium term position, but it also gives me an opportunity to buy in on my short term position. Because LTC halving, guys, is still right here in August, okay? I still think LTC has a bit of a ways to go. I think it can still cover 160 to 180 targets. But again, I'm going to be looking out for Bitcoin through this entire, movement in terms of me watching where BTC is going to land. All right. Let's see what else we have. Covered that. I did cover Google Trends yesterday, so go watch my video from yesterday if you want to figure out why I was looking at Google Trends. Another thing that I mentioned was this thing in the Bitfinex chart. Okay, this was the consolidation that I had talked about. I stated that, every couple moves right here, we consolidate, move up, sideways movement, and then another sharp move up. Same thing happened here. We consolidated right here, sharp movement up, sideways movement right there for a few days, and then another sharp movement up. And now I think we're coming into that same box of consolidation, okay? If, again, these two fractals are anything to show for. So that consolidation could be as low as, 10.5, 10.7, and it could consolidate as high as, 12.9 or 13,000, okay? So this might be the area for us to look out for in terms of a potential fourth wave consolidation for a good month or something. All right. I think that wraps it up, folks. Answered a lot of questions. You can see our reviews right here. Come join our community, folks. We're worth it. Lots of engaging content. Lots of community support. Tons of trades, tons of information, and a massive education channel right here that you can check out. All right, take care, folks. Cheers, and look out for those levels that I talked about.